Good morning, everybody. It is Friday, October 11th, 2019, and the escalation in the Middle East continues its slow burn. Maybe that's not the right way to describe it, but apparently some missiles hit an Iranian tanker, oil tanker, that wasn't far off the coast of Saudi Arabia. Saudi Arabia apparently didn't launch the attack. However, it appears that it was proxies of Saudi Arabia. So basically, Saudi Arabia paid somebody to attack Iranian oil tankers. So to what end will that change the oil market? And if the recent past has anything to teach us, it's that it probably won't change things for long unless this becomes a lot more regular. And again, I urge you, if you're not using Twitter, it is one of the things that I would add. I would create an account, some sort of name, and go to my list of people to follow. Follow me. Go to the people I'm following, and some of the news sites you don't have to follow, but a lot of the experts, Mohammed Al-Arian, Brennan, some of these analysts, they put good stuff up there. So if you don't want CNN, which we really don't need, we don't really need Greenpeace. They're not teaching us anything. I just follow them from time to time. Some of the better correspondents are worthwhile. And I'm finding people in the Middle East and around the world, which is really my focus now, they can teach us. So this guy, we found a while back, and he's not really talking about the missile attack, so he didn't really have an inside light on that. But the missile attack on Saudi Arabia a few weeks ago, this is the guy that basically broke the story that it was cruise missiles, and nobody would publish him right off the bat until it was confirmed. But his sources were that it was cruise missiles on the Saudi Arabian facility, and that turned out to be true. So there are good sources out there. So what's going on in oil other than an attack in the Middle East? We have other supply problems: Ecuador, Venezuela, Angola. This is a weird article. This company was having a problem, and now they want to IPO. But there's all sorts of problems in Angola and the African coast. Halliburton laying off 650 people. Why? Because work in the oil fields is slowing down. So while we have disruptions in the Middle East and other places above and beyond, the worry about trade is overwhelming everything. And something I would point out here is we could see things go in the other direction if there is some sort of fake deal. So if the United States and China have a fake trade deal, which would take the form, and Kyle Bass talked about this again yesterday or 2 days ago. It's the same thing that I said back in February, is that we're not going to see any structural change out of China. However, they might buy some more soybeans, maybe some natural gas, maybe even some oil. Because everybody's been expecting a slowdown, and I do think it's coming either way, if there is a fake trade deal, then we probably see the markets rally. Today, we take a look in the markets on hope, just on hopium. There's no news, But the market's up 428 points on the Dow, 44 on the S&P. On what? On hopium. So could this market go higher? Like I said, 3,100 was my forecast for this year, 3,118, whatever I came up with. It was some sort of projection of earnings for the end of the year. I still believe that you want to sell into the rallies. And by the first quarter, you want to be net neutral, basically not having any market risk, stock market risk. So that'll mean you'll want some bonds or hedges by February maybe. But we'll play it by ear as we always do. We'll follow the money flows and we'll see how things are going. But if there's a fake trade deal and you have the end of the year coming, Santa Claus rally, and then the January effect, 32, 33, 34, 35, 3,600 on the S&P, it could happen. Maybe there's another 10 to 20% of upside, despite the fact that most of the world economy is seeing a slowdown in manufacturing, in business services, in global trade. Transportation has been flattening, but not coming down, so that's bullish. Wages are barely drifting up, and that's bullish for corporations. But you have CEOs sitting on their wallets because they're worried about the next election. And ultimately, as I said, I think it's very, very unlikely that President Trump is President Trump in 2021. He will be former President Trump in 2021. I'd say about 93% likely at this point, maybe 92.5% likely. But the odds of him threading the needle, even if he survives impeachment, which I don't think is a known thing, I think it's probably in the coin flip territory at this point, means that the super wealthy who enjoy very low tax rates right now probably become sellers next year. So we have to watch that. All this leads me to believe sell the rallies. With oil, it's a little bit different story, because with companies like Halliburton, which provide, they're the second or third biggest services provider out there, with them doing layoffs, that should tell us something. That should tell us that the supply of oil, even in the United States and the places where it's relatively safe, is slowing down. So supply growth is slowing down. Now, you have the EIA, which is controlled by the White House, suddenly lowering its oil price forecast. Well, for them to do that, they have to believe one of two things. Either that demand is going to fall or supply is going to rise. And they're saying that supply is going to rise. We're not seeing that in the evidence. We are seeing spending across the oil industry slow down. We're seeing more small company bankruptcies. We're seeing some of the big independents like Occidental and Pioneer limit their budgets. Concho, we have 85% of new oil in the United States coming from Texas, and most of that is the Permian. So if the growth rate flattens in Texas, the growth rate flattens for the United States. A lot of moving parts. My guess is that if we get a fake trade deal, oil really rallies. Maybe that's our opportunity to get out of some of these positions. For sure, take some of our money back out of the calls that are left, and then reconsider our asset allocations. What are the oil companies doing to try to get people to invest again? Well, as we know, when we talk about the Dirty Dozen oil stocks and Exxon and Chevron, they are limiting their growth. They are buying back shares. They are reducing debt where, in most cases, the majors are having a hard time with that, but the Permian stocks are doing a pretty good job. And they're raising dividends. So you have companies like Devon Energy and Kana, both have a dividend now. Occidental's dividend is around 7%. I believe even Pioneer Energy has declared a dividend. Parsley Energy, which is a big-time takeover target, has declared a dividend, just in case they stay on their own. So shareholder yield is the name of the game for the oil companies that are surviving. And if we look back at other industries that have gone through consolidation, which the oil industry is going through right now, a lot of mergers, acquisitions, several take privates since I brought it up several months ago, the survivors will be very profitable. The little itty bitty guys are getting crushed because not only are they not able to finance themselves out of cash flow, but the bank money is dried up and the investor money is dried up. To the extent that private equity can go in there and vulture, pick up some of these things as a vulture, they will. But for the most part, there's no loans. There's no easy money for companies that can't turn a profit. So the industry continues to consolidate, and that will leave the survivors stronger. Of course, they're up against the long run, which is a dying oil sector. Again, here's the chart that I came up with a couple years ago. 2020s, I believe supply and demand will be roughly in balance. Supply just a hair below demand, and there will be very little growth in either. As electric vehicles accelerate penetration around 2030 and towards 2040, you will see demand destruction. And while this looks like it's falling off a cliff, take a look at the numbers here. It's from about 104 million barrels a day, 106 million barrels a day, to by 2040 down to maybe 88, 85 million barrels a day. It's not until 2050 we're way down here to 50 million barrels a day. It's still a lot of oil. Now, other people think it does fall off a cliff. I don't know how we would do that, given that people will keep their cars. I just put $5,000 of work into my Toyota 4Runner, a 2006 Toyota 4Runner, because I don't intend to ever buy a gasoline-powered vehicle again, but I want a gasoline vehicle for the 2020s. I like my truck. I like the 4Runner. And I think there's a lot of people out there that, despite being environmentalists, like their cars, particularly their SUVs. Why? Because I can drive up a mountain with it. I can go through the gravel with it. I can drive off-road with it. And I've done it. Now, there's a lot of people. Somebody called my 4Runner a Highlander the other day. I was quite offended because the 4Runner is a much sexier vehicle. The Highlander is basically a minivan without the minivan shape. I think there's a lot of folks who don't know the difference, and they'll just keep their Camry with a big body. That's what a Highlander is. It's on a Camry platform. But for those folks who want something a little bit more rugged, you'll see those gasoline vehicles around, not just to 2030. I think I might buy another one. Why? Because at this point, oil is going to get really cheap. And here's somewhere it gets expensive again. So for special purposes like travel, I'll keep a gasoline-powered vehicle so I can go from Milwaukee to New Hampshire or the Rocky Mountains or Florida or Texas or the Canadian Rockies or wherever it is I go, because the gasoline is going to be cheap at some point again. In the meantime, with our stocks, Occidental, Devon, Pioneer, Encana, Parsley, Centennial. We want the ability to sell these rallies. And how high will these rallies go? I don't know. Remember, the long-term secular trend is against oil. At what point are there just not people who want to buy oil stocks? It seems like we're already running into that. So the rallies are for selling. That doesn't mean the dips are for buying. And we've been through this a number of times. People ask me, should I add more Occidental? Should I add more Pioneer? Occidental is the one that I think we can hold for longer term because of their CO2 business. And if you saw the headline this week, they are getting into solar energy. They're powering their oil fields with solar energy. So how big of a step is that before they're just producing solar energy? Not a big leap. So I like Occidental. If they sell most of their non-Texas assets, as I hope they do, then they're going to do a good job with crushing the debt on that company, which they've already gotten rid of like 10 billion of it. If they can knock off 20 billion instead of the projected 15 billion, now all of a sudden this is a very low debt company to the revenues that they generate. I hope they get out of Colorado, but in Colorado and North Dakota and Oklahoma, maybe what they do is they become big solar energy producers and they just run out the clock on the oil and gas. Maybe they don't put a lot of money in the drilling, but they keep taking the revenue. And they just have to maintain those fields versus chronically drilling. We'll see. But Occidental, for all the people who ripped that company down, I think that they're doing things right. It would have been nice if they didn't have to go to the bank of Warren Buffett and pay a little extra. But ultimately, it's only a little extra. It's roughly $1 billion extra dollars, which for numbers this big, it's a couple percent. You know, it's not a ton of money. So this is something I want to talk about at the end for all you Bitcoin folks. So let's take a look at our companies. Occidental, as we covered recently, it looks like it's in a bottoming process, right? Long-term money flows out of the company, bottomed out, just starting to tick up on the monthly, but you can see a little bit better on the weekly, and a little bit of pullback. Every hope is met with despair. So here you go. On the daily and the monthly, it's beat to heck and just turning up. So those weekly pullbacks are probably buying opportunities. I told folks that the bottom appears to be between 35 and 42 on Occidental. I think I said that in the last webinar, right? Or maybe 2 webinars. It was recent. And here we are. I think it sniffed 40 and change yesterday. Well, let's take a look at a daily chart. My fault. So yeah, 40.45 yesterday on the low. Look at that. That's a pretty nifty bottom on the daily. We already know that the weekly was pulling back because of this. And the monthly is beat to heck because of all of this. So there's not really much downside left in Occidental unless oil suddenly disappears. If you don't own Occidental and you're not overexposed on oil, I think Occidental is something that you can buy about now. I think that the dividend will do you well. In 10 years, you'll double your money just on the dividend. And the stock price probably does roughly double. Now, for the stock to get over 100 ever again, the management has to do a lot of things right. And my idea that there will be an extended plateau for oil demand that generates enough revenue for the oil companies has to hold true. If in 3 or 4 years there's a wave of offshore drilling, that could send the price of oil crashing 3 or 4 years, 5 years from now. So way before the 2030s. And that's something for us to keep an eye on. What if Exxon just drill baby drills off the coast of Guyana and in Brazil, and Chevron does the same thing? What if all these countries that need cheap energy and some revenue just drill baby drill? It could happen. We've seen that type of irrationality from oil companies. But what if there's countries, Angola, Libya, right, Venezuela, Brazil? What if these countries decide, hey, we've got it, we're going to drill it, we're going to use it, even if they use it at home for cheap energy, which is, I think, a pretty high likelihood probability, is that some of these second world and third world countries are going, and I know those are the politically incorrect terms, I don't care. Those countries need cheap oil, cheap energy, and if they can keep it cheaper than buying solar technology and batteries, they're going to use it. So ultimately, for oil to really get hammered in the countries that actually use it for more than cars, you need solar and batteries to get cheaper. That's happening. We don't know how fast. We think pretty fast, but we don't know until we know. So while there are several new battery technologies that I talked about a year ago now, some of you who have been with me long enough know I talked about this a year ago, we're probably going to get much, much better battery technologies somewhere in that 2 to 6 year window. I think closer to 2, but it could be as long as 6. We'll see. The cars probably don't switch away from lithium for, towards the end, the 6 year window. But grid storage is going to get much, much better very, very fast. In fact, if you're following California right now, what you know is that they have rolling blackouts because PG&E doesn't want to accidentally start another massive fire. What California should do, and what I think they will probably do, is they're going, and I was talking to somebody in San Francisco who's a pretty smart guy yesterday, you'll probably start seeing microgrids throughout California. Neighborhoods, subdivisions, industrial parks, movie studios. You're probably going to see solar at the local level, at the municipal level, at the neighborhood level. And it'll probably come very quickly because it doesn't take a lot of space to do it. Plus, the new buildings are required to have solar. So Sun Power, which we've talked about in the past, has a lot of money to be made in California as they switch away from natural gas, which is what they're trying to do. They've already basically killed coal in California, and now they're trying to kill natural gas. And that means a decentralized grid is coming to California. Once they prove it can be done, it's going to happen everywhere. How fast? Again, we don't know, but we want to be on the side of those big trends. So, and again, the grid level storage probably won't be lithium. We know that zinc and now aluminum and some other approaches are working very well. And once we get them to the manufacturing level where it's mass production and cheap, there you go. And there's companies moving very fast to get into that space. So they're not waiting on the government to do it. You've got companies that see it and they want to become rich, get big, and they're pushing the envelope on technology, on development, on manufacturing capability. It's all coming. Again, how does that impact our oil stocks? Well, here, take a look at this article I wrote on Encana. It's over at FA Trader. I still think you get a free trial there. Just ask them for a discount. I don't even know what the discount structure is anymore. Just ask them for a discount. If they don't give it to you, tell them to go pound sand. Just $2 a day. Yeah, tell them you want it for $1 a day. All right. Encana, similar chart to Accidental. It hasn't turned over on the weekly. Well, you'll see the monthly. It got just crushed. Came down. Didn't bottom quite as far, but it's still pretty low. Take a look at longer term chart. So it came off these highs. This is where it bottomed. What's interesting, the share price hasn't moved that much. It's stabilized in the 4s. Weekly's starting to move up. Not positive yet, though. Yeah. I think Encana has the ability to really shoot back up here towards 10. I think this is a good position trade over the next few years. Maybe just a year. I don't know. I don't know how fast it's going to take. Again, timing's hard to know. That's why we don't want to use options, because we don't have to deal with the calendar. We buy this. We know the dividend's going up. We know they're doing share buybacks. We know their debt is coming down. It's a shareholder's dream, a shareholder yield dream. All we need is to get somebody to buy the stock. I think, again, as these companies become more attractive to the super wealthy and the private equity, and maybe to some focused funds, they start buying up the shares on the cheap, push it back up. Why? They may not even care about the share price. They're just going to want all that cash flow. And the cash flow is a coming. Pioneer, same thing. And I point something out about oil stocks. If you're listening to mutual fund managers, listen to somebody else. The mutual fund managers are morons. Those are guys, I can go and take their job if I want it. I don't want those jobs. Why? Because mutual funds have charters and restrictions and compliance details that don't allow you to be a good investor. The main reason mutual funds suck is because the rules are skewed against them, and 2, the smartest people in the room know not to go work there. So when somebody says, oh yeah, I got a job at, Fidelity's a bad example because they're a good shop, but whatever, pick a mediocre fund company. There's still a lot of them. It sounds impressive, but it's not. Most mutual fund managers, most equity analysts, they're just followers. They stay in the crowd. They don't go out on a limb. They don't do real research. They just say what everybody else has said. Kind of like 80% of the articles in the financial media. It's regurgitation. There's a couple articles on Seeking Alpha this week, and I commented on them, and I'm nice about it now because I was told to stop being not nice. But some of the stupid articles out there. There's an article about Occidental Petroleum this week, and they're going to get lucky because I think it's the right time to buy. But they didn't know why to buy. They didn't understand the CO2 business. They didn't understand that they're getting into alternative energy. They didn't understand what the value of the parts are. And they said, oh, look, the PE, the this, the that ratio, the other ratio. What the fuck are you talking about? If you don't have context to the numbers can tell you anything. Just like these technical charts. They're hints, right? And I really like money flow because it tells me if there's anybody buying the stock or selling the stock. But go to almost any company out there. Explain what the PE ratio means. Is this good or is this bad? Pioneer Natural Resources has a PE ratio of about 25, trailing 12 months. What does that mean? Does it mean it's expensive? Does it? That would depend on the growth rate, right? That would depend on where we are in the earnings cycle. What if they just had a whole bunch of expenses and their earnings are temporarily low? If their earnings double in the next 2 years, then that PE isn't so bad, is it? So when people throw those numbers out to you, scratch your head a little and say, okay, what's the E doing in PE? Where are we in the cyclical realm of things when we talk about price to sales? Ultimately, ask about the cash flow. Is cash flow going up or down, and what are they spending it on? If they're buying back shares and reducing debt and paying a dividend, that's good. If they're raising the CEO pay by triple, that's bad. Because most of them are already making 3 times what they're worth, at least. All right, so Pioneer, again, another similar chart. You can really just take a look at the cash flows from the end of last year and the middle of this year. They just got pummeled. Now they're starting to turn back up. Why? It's pretty easy to see here. Just take a look at a 5-year chart, right? Even a 10-year chart. They got beat up. This is the long-term support right in here. This area here. Just make a box. And we're down to this range again. Look, bounced off. Broke through, went above, came down, supported. This is the line. Right around here. You know, I actually thought that this was going to break out a long time ago. It didn't. Now, we should get back up to that 180 range without a lot of sweat. It might take a couple years, 2-3 years. But if you make 50% in 2 or 3 years, are you brokenhearted? What if there is a war in the Middle East and supply is disrupted more, and we decide to fix the economy by not bickering over stupid little things in trade-related matters? Then, boom, right? Demand goes up for a while, supply doesn't catch up, and you get a surge. And again, the war scenario, if we really get a war in the Middle East between Saudi Arabia and Iran, you're going to see the price of oil go to 150, maybe 200. I hear, Stansberry says 300. Parsley, same thing. Beat up lately. Beat up on the monthly, but starting to inch its way back. Weekly turning up here on this one too. Parsley under 20, I think, is a pretty good buy, especially since these guys are like the perfect snap-on, bolt-on acquisition for Concho or Pioneer or Occidental or Exxon or Chevron. There's a lot of companies that could buy Parsley. Devon apparently has been in talks with somebody on a merger for months and months and months. And look at that support level. Right? Gets to here, gets to here, gets to here. Basically holds it. So you're at a pretty strong support level for Devon Energy as well. And again, buying back shares, increasing their dividend, reducing their debt. It's boring, right? It's just boring, all these companies doing the right thing finally. Now, a couple of the names I've been asked about. Chesapeake. Chesapeake's just getting beat to hell. They need the price. I've said this is completely dependent on the price of oil and gas. These guys need the price of oil and gas to go up. Bottom line, that's what they need. I think they should sell all of their oil assets on the next rally in oil. I don't know that they agree with me. I think that they should sell pretty much everything that's not in the Marcellus maybe keep the Powder River Basin because there's oil and gas there. Sell everything else. Eagle Ford, Oklahoma Stack Scoop. Just sell it. Get that debt down and have 1 or 2 producing assets that are natural gas focused again for a couple of years from now. We'll see if they do it. I don't know. They've been exchanging equity for debt, which we knew was coming, and the share price just keeps getting pummeled. This is another one of those companies that I think could go private. I just don't see why a private equity firm wouldn't buy them at this point. Doesn't mean I want to buy them. They might go down to a nickel first. Antero Resources, probably the next best natural gas company or the best natural gas company. Them and Chesapeake are both near the top. They got pummeled because natural gas got into a glut and just doesn't come out. So again, the story with all of these companies is their individual operations. These companies in particular, Chesapeake and Antero, need the price of natural gas to go up, and oil for Chesapeake. I don't think I'd buy them right now. Am I holding them? Yeah, I own them both. Am I happy about it? No. Would I buy more on a dip? They either come back or they don't. I'm not interested in expending more capital on something that's become speculative. Remember, for over a century, these companies were no-brainers. You bought them on the dips forever. The future came way faster than a lot of people expected, and you still need to get that into your head. I've accepted it. Didn't want to. Didn't think I needed to. It's not that I didn't want to. I would like to see the whole world go alternative energy quickly. However, because that would get rid of a lot of wars, right? Maybe you have one big war in the Middle East just because they ran out of money and they have nothing better to do. But the reality is that alternative energy creates jobs too. So that's really a wash. And people who talk about the coal miners or the oil guys losing their jobs, there's other jobs. Change is forever, right? So I'm not looking to expand my asset allocation in any of these. I am buying Occidental in certain accounts because they didn't have it. I own Kinder Morgan because I think the pipes are forever. Those right-of-ways are forever. It'll probably get used for water at some point. So I like Kinder Morgan. I like Occidental. These other ones are trades and consolidation in the industry. And these two have become speculative. So if your risk tolerance is that I don't want to add speculative stocks, then don't add these. Right? Even though there's a better story for the Permian stocks than there is for the gas stocks at this point, right? Which is weird to say because everybody thought, hey, natural gas is going to be the bridge to the future of alternative energy in 30 years. The future of alternative energy is coming quicker than we thought. Innovation is where you want to be. Disruption is where you want to be. So for those of you who logged in early, you saw that I had a podcast from Bloomberg where they interviewed Kathy Wood from ARK Investments. I think it's worth watching. And I think you ought to be reading the ARK Investments material. It's not necessarily that they have the best investing, although they've been really good lately in the last several years since they got started. But they can do, and I heard something in the podcast today, which led me to talk about the mutual funds earlier, is that they don't have the same sorts of restrictions because they're exchange traded. You can buy and sell at any time versus the end of the day, as with mutual funds. They have an easier charter to deal with. So, when we take a look at funds, take a look at this. Add SPY. And I don't think this goes back that far. All right. So as we've talked about over and over again, forget the S&P 500, buy QQQ as your core position. But then this ARK Innovation Fund, if you want to add some aggression to your core holding in QQQ, I like this fund. And they have several others that you can trade if you want. But this is done very well. And if they're right about Tesla going over 1,000, they're going to do very well because they have a large, like an 8% position in Tesla. So you have to decide, do you want that kind of exposure to Tesla? All right. So an Exxon, I want nothing to do with. Chevron, I want nothing to do with. They're going to get sued eventually. And they're going to have a settlement. And they're going to split up. That's what might be attractive to me someday, is when they're on the verge of breaking up after they get beat up. So after they get beat up, they're going to have to break up. And one part of the company will go bankrupt. The other parts will be worthwhile. Oh, I did a little poll. Let's see, how are we doing here? Is it closed? Final results. 30% of the 43 votes, very scientific. 30% of folks think that Trump has no chance of getting impeached and removed. I should have used the word removed. 35% think that he survives. 30% thinks that he gets impeached. Only 5%, so that would be 2 voters. I wasn't allowed to vote because I set up the poll. 2 voters only think that he's overwhelmingly impeached. Interesting. I said that with these odds, and because I wanted to rickroll people, I would bet that the vote in the Senate ends up being overwhelming to impeach him. And I have my reasons for thinking that. But I would point out that if President Trump is impeached, then all the super PAC money Republicans can do what they want with. Sometimes money matters. All right. We'll finish up with a little bit of Bitcoin. I've said in the past that one of the reasons that Bitcoin surged is because of all the capital flight out of China. And then it crashed because they were able to draw on the reins on capital flight. And now it's happening again. The price of Bitcoin's gone up again. Most, and it used to be 80 to 90%, I'm sure it's a little lower now, of the transactions in Bitcoin are out of China. All Bitcoin is a way for people to launder money. That's all it is right now. I'm telling you this as a guy who has got a book on the mafia someday getting published, hopefully. It's done all the research. Bitcoin is a money laundering thing. People aren't using it for transactions. They're trading it and they're using it to launder money, buy illegal stuff, mainly move money out of their home countries. In China, we know that they fake import-export deals so they can move money out of the country. What makes you think they're not rope-a-doping stupid American investors, mainly millennials, and saying, oh, look, it's going up, it's going up, it's going up. Meanwhile, they're just funneling their money out of China, get other people to buy the Bitcoin, and then they convert it to dollars. And that's what they're doing, is they're absolutely converting it to dollars. Yeah, a couple Swiss francs and things like that, but mainly to dollars. So if you want to believe that Bitcoin is the future of money, feel free. But I'm on the record, and I'll say it again. Bitcoin's going to go under 1,000, and its normalized price is going to be much, much, much lower. So take your chances if you want. But the correlation between capital flight out of China and the price of Bitcoin is virtually identical. And I will find that chart somewhere to show you. All right, let's do a couple seconds on question and answer, but then I have to go clean out my garage and my basement. Yeah. Somebody mentioned the Lake Michigan bluffs collapsing. Yeah, it's been happening. Just check the Milwaukee Journal Sentinel. Somebody mentioned Art Berman. Oh, I like the Land Cruiser too. I might bump up to the Land Cruiser if I take bigger trips. We'll see. I like the 4Runner because it's just the right size, and I don't camp directly out of it. In fact, I'm thinking of not doing a camping trip that I've been doing for a decade next year. I just can't take the cots anymore, and I for sure don't want to sleep on the ground. Yeah, Total, SunPower. I just have a taste of Chesapeake, as I talked about. Yeah, I think ECA. I think we've had the floor in ECA. Decline of concern. I think SunPower is the leader in commercial solar power. That's the place to be. We've talked about that for years. I buy the dips on SunPower. I told you the other day I'd sell the $9 puts on SunPower. You get $1 for them, give or take, a couple months out. Any reason to hold any natural gas stocks? That's a good question. I don't think you have to. I don't think it's a required part of a portfolio anymore. It's something that you can trade if you want to. PSX, yeah. The only refining company I really like is Marathon Petroleum, to be honest with you. These guys are very heavily dependent on petrochemicals, and I just don't think that that's the growth industry that people think it is. There was actually an article in oops, I missed. Yeah, wrong one. How much crude does plastic production really consume? So plastic, there's replacements for petrochemicals and plastics already. Coca-Cola, IKEA, they're all using it. That's just going to hit a hockey stick in the curve at some point. So eventually, most oil and petrochemicals used for plastics, it's going to be very specialty. It's not going to be mass production anymore. So no, I don't like them. I don't like Phillips anymore. So I said that up here. So no, Marathon Petroleum, because they have a good ratio, right? They can grow profits more in the short term. I've looked a little bit at Wisdom Tree. I kind of like how they do things, but I haven't looked at those specific Modern Alpha ones. Fake trade deal somebody asked about. Like I said, it could fuel a rally, but it would be a rally to sell into. Somebody mentioned the Chinese using Bitcoin to move money into real estate. Absolutely, which is basically dollars in physical form. The Fed to start buying $60 billion in bills per month. That probably has to do with money markets. Yeah, I'd have to see what they're planning on doing. There is a liquidity problem that's been emerging, and we'll see if that changes. I do like all that solar basket I've mentioned. I like Solar Edge, Enphase, SunPower, and First Solar. That's a great basket. Buy them all on the dips. If you want to be aggressive, buy at the support one level, buy at the support levels. But I really think we're going to get a lot of bottom fishing opportunities. The thing is the best stocks don't necessarily get the bottom fishing. Everything else does. Lake Michigan Bluffs were big time collapsing in the 70s too, huh? Yeah, they're really going down now. Mosaic, big move today. Yeah, NTR went up today too. 5%. Their news. Yeah. See, everybody's cutting their potash production. You want to see an oligopoly at work? Oops. Nutrien. Take a look at these potash producers in Europe and here. They've all pulled back on their potash production. Yeah, they're up 2%. The price of potash is going to go up. And at some point, the farming industry is going to need a ton of it. So whether that's next year or the year after, hard to know. There's a big problem in the Midwest with the flooding in Nebraska and Iowa, though. They have major soil problems suddenly because the soil's getting washed away. So I don't know exactly the big impact on that, but they're going to have to. There's going to be a lot of bulldozers moving dirt around. Yeah, there are biotech stocks out there. This is one that I watch quite a bit, right? I have to figure out where our buy prices are. Low 20s and low 30s, probably on CRISPR. So, all right, I'll let you guys go. Have a great weekend, and I will get this up this afternoon for those who came late. Have a good weekend, and I'm finally starting to get caught up. So expect a lot of updates on fundamental trends. I have had my tech team fixing some things so that I can just start loading a lot of content again. And I'll be running big specials at the end of the year for new subscribers and for existing subscribers. So if you're like, I don't know if I want to spend $500, I'll probably come up with some sort of a discount for everybody. I think I'll bring everybody back to that $365 price that I had a while back. So everybody will get a coupon. I like the Bucks. I am still interested in a moderator for the chat room. So the Bucks opening night for me is Thursday. So we'll see. If anybody's in Milwaukee and you need Bucks tickets, let me know because I'm not going to go to all 20 games. But Giannis is better again. He came back with a drop step move in the offseason and doesn't just run straight downhill. He's moving more side to side, creating space. If that guy creates 2 or 3 feet of space now more often, how do you stop him? He's already 2 feet above you. What if you can't get your arm and your hand anywhere near him? So triple team him at your own risk. We got like 6 more shooters. So I think the Bucks are, I like Brogdon. I've met him several times. Good guy. He's a good guy. He'll do well in Indiana. I hope his foot's good. No ill will towards him. Love to see him re-sign with the Bucks someday. But it was a trade that made sense so we could keep everybody else. And with Giannis being so good, there's veterans that'll come here and play for cheap. And for 2 years at a crack, it's worth doing. And maybe Malcolm's a buck again in 2 or 3 years whenever his contract is up 4 years. Yeah, NBA should not have kissed. Was it the NBA that kissed China's ass, or was it the NFL? It was the NBA? Yeah. You know what? The NBA shouldn't have said a word. I didn't like David Stern. I don't like this guy either. I don't think the NBA is truly run all that well. I think it survives because it's that fun to watch. It's kind of like the NCAA. NCAA screws up nonstop, but it's just so fun to watch the tourney in the spring, right? And college football on Saturdays. So, despite leadership, some things are just that good. So, and chat room moderators I am looking for. More than one would be fine. So, get a hold of me. I'll start making those. I'll start having those meetings in the next week or two. All right, everybody, have a great weekend.